Well, first off, thanks everyone for joining the New Hampshire Insurance Department today to discuss our legislative crossover for the 2022 legislative session. This is our second such meeting. We had one of these meetings at the beginning of the legislative session, and we heard really good responses from folks who were able to join the pre-session meeting. I guess I'd ask everybody to put their mics on mute. Perfect, thank you. I'm joined by a number of my colleagues from the department here today. That include Deputy Commissioner DJ Betancourt, our General Counsel Heather Silverstein, our Property and Casualty Director James Fox, our Life and Health Director Tyler Brannon, Tiffany Fuller and Andrew Demers, who are from our Consumer Outreach and PR Division, are on, and they're going to be assisting with questions when the time comes. I'm not sure if Sarah Giroux, who's our new legal coordinator, is on. I know she's in training today, but Sarah is a recent addition to the department. She'll be filling the role that was most recently filled by Marty Mobley. So she'll be first line of contact for many of you through the legislative session as we go into the second half of this year and into next. I encourage you all to welcome Sarah to the team when you do see her. We're very excited to have her. She joins the department after a number of years working with the legislative team over at Gallagher, Callan, and Gartrell, and she's going to be a great addition to our team. On today's program, Heather Silverstein will highlight SB 208, which is a life insurance statute rewrite, as well as Senate Bill 285, which refers to discount medical plans. James Fox will be discussing Senate Bill 206, the Consumer Guarantee Contract Bill, and parts of House Bill 1559, known as our Omnibus Bill. Tyler Brannon will highlight a number of relevant health insurance related bills that have passed over from one house to the second. And Deputy Commissioner DJ Betancourt will discuss paid family leave legislation. If you have questions at any point during the presentation, I ask you to type them into the chat. Tiffany and Andrew will make note of them, and at the Q&A portion, we'll address them in an orderly fashion. So to start off, I'd like to introduce Heather Silverstein, our General Counsel. Heather?
Hi, good morning. Can you hear me okay? Yeah, okay. So I'm going to try to share my screen and let's see if it works this time. I think I got to move this over. Can everybody see that okay? Okay, so the first bill I'll talk about is SB 208, and this is a rewrite of our life insurance bill. This was actually a 2-year project by the department to do a major rewrite of our life and annuities law. We had a lot of things that were outdated. We had things that were duplicative. They were in other statutes, and it didn't make sense to have things all over the place, really. With regard to the statute. So we actually had introduced this last year during the pandemic, and it passed, I believe it passed one of the houses, and then it just didn't go any further because of the pandemic. This year, we passed the Senate on consent, a voice vote, and we just came out of House Commerce as ought to pass. Looks like it's going to the House floor soon. We're not aware of any industry concerns with this bill. Again, it's a major rewrite. We have a legend, if anybody would like to see it, as to like what the old provision was in 408 and whether that's just being taken out completely or if it's covered by another law. So that is something that if anybody would like to see that, we can provide that. Again, this has been a major project for the department over a 2-year period. So we took a lot of time to try to make sure that we were covering everything that we needed to cover, looked at other states' laws, looked at what was happening on national level with the NEIC, and tried to just update this law. So that's it with SB 208. And scroll down. So the next bill is SB 285, and this relates to discount medical plans. We started regulating discount medical plans in 2009 under RSA 415I. We took the changes that we're making to this law from the NAIC model. You know, as you are aware, discount medical plans are not insurance, but they are something that we regulate as part of a consumer protection and something that the NAIC also provides a model law for. There was an amendment in the Senate that we worked on with industry, and that got rid of a surety bond requirement. There's going to be another amendment in the House as House Commerce had questions about the term good character, which we had used in SB 285. So we suggested changing good character to something similar to what we have in our TPA law, which is that applicants are trustworthy, financially responsible, or of good personal and business reputation. And that amendment, it sounds like after the hearing last week, that would be an acceptable amendment. And my understanding is that is going to the House committee again this week. So those are the two bills that I'm covering, SB 208 and SB 285. I'm not sure if we're doing questions or we're doing questions at the end. So if we're doing questions at the end, then it's James Fox, our property and casualty director, who will be up next.
Yeah, and we'll do all questions at the end to make sure we have time for the team to get through their presentations.
So I'm gonna stop sharing, or did Andrew already do that?
Nope, you'll need to stop sharing, Heather.
All right, I think that's all set. So then I think
perfect.
James is up.
Okay, my name is James Fox and I'm the P&C director. I'm not very tech savvy, so I'm just going to try to do as good as I can. Obviously this is the P&C legislation this year. We didn't have a lot of legislation this year, which I think is a good thing. And so we starts from current slide. Okay, so there we go. So I am supposed to cover two bills. SB 206 was a consumer guarantee contract bill, and that was worked on here at the department with Emily Doherty from the legal unit, and obviously the commissioner, the deputy commissioner. And on this bill, I'd say just generally as it worked through the process, George Roussos had input and Jim Hayden had input that was very helpful and helped the bill kind of develop as it went along to its current state. And then so we'll start with that one. The biggest push in that one was to repeal the prepaid legal contracts from the consumer guarantee contract law. Consumer guarantee contracts generally are extended warranty service contracts that when you buy something, anything from a car to a piece of electronics at a store that's sold to you. And the law in terms of those products has been very valuable. It's not really insurance, but it's kind of has insurance feels to it. Much like warranties, normal warranties from companies aren't really insurance, but they still have a feel of insurance. And so that historically that's been very valuable. We get complaints, we can look at stuff and see how the law can be tweaked to help consumers while also balancing the needs of the industry. So the repeal of prepaid legal contracts means those are gone. That's like LegalZoom. In terms of why we got rid of those, the department spent more time looking at the contracts, see if they technically qualified as a prepaid legal contract or not. Some companies did, just submitted them for that purpose. In the 10 years I've been here, we've never had one complaint on that type of contractual agreement. So we didn't think it was worth continuing on, so we can focus on things that have more value for the department and consumers. One change that we made that's not the prepaid legal contracts, which is in terms of all extended warranties, service contracts, is that if the contracts are 12 months or more, that the return should be a pro rata return as opposed to they being fully earned upfront. And then, but the contract companies are allowed to have administrative fee of $75 or 10%, the lesser of the two. That's pretty straightforward now that we've kind of come to that, but that was worked on to make sure again that the balance of the needs of the consumer and the needs of the industry were all taken into account. I think the department was pretty proud of SB 206, and I think it went through, it's already actually gone all the way through without any problems. The next bit I have to talk about is the omnibus bill. Commercial inland marine is now exempt from rate filings. We used to have some extra language in there that really was unnecessary, as we had some questions about whether it was completely exempt or not. It's been exempt from forms for a long time, and this is again something we don't feel that we really need to have an upfront rate and forms oversight of. So that's gone. In terms of the rebate law, the rebate law is now in 417.4. It used to be in 402 and 417.4. So a while ago, we consolidated it into 417.4, which is a great project that was spearheaded by General Counsel, who just spoke. And now we have two issues. One, producers allowed to share commissions with employees. That was pretty non-controversial. I mean, again, as it says there, rebate laws, it really is supposed to only address two issues: solvency, if the company's going to go insolvent by giving money away, which is how it started 100 years ago, and unfair discrimination, to make sure they're not discriminating against any particular group of people. And so the other thing that was actually put through there that I didn't really list is that, oh, there it is. The commissioner is allowed to permit rebates, kind of what I would call in the public interest, which we all just obviously went through or in the middle of the pandemic issues, and there was a lot of work that went here into exactly how companies that wanted to give rebates would be allowed to legally. We thought at the end of all that it'd be better just to have it's pretty detailed if you look at the language, but to allow companies to give rebates for the public interest. And then commercial lines cancellation, really there's two. One, basically, we had a year ago, 2 years ago, we put in that in commercial lines, the specific request of the insured, the company must cancel. And in personal lines, we always have taken the position that must be immediately, as soon as they're notified of the desire to cancel. That didn't really work well in commercial because there's actually in the contracts, there's like that the insured must give a certain amount of notice. So we basically wanted to accommodate those contracts by putting the notice provision in the law. And then the other thing that we put in that I did put up here is that for in auto 417A cancellation, that the cancellation notice can't begin until so say for non-payment, which is the one we're talking about, until the non-payment occurs. We had some companies doing, I guess, predictive cancellations. That says if you don't pay us, you'll be canceled. And then so they said we gave the notice. New Hampshire has always taken the position that those notices are for the purposes of curing. So they have to come after the non-payment, which is what now the law makes perfectly clear. Again, just a clarification. Those are what we addressed this year. I decided I should put our emails up. I'm the P&C director. We have Emily Doherty, who's the P&C attorney, who's probably knows more about everything than anyone here. And then we have the actuary, who knows everything about rates. So if you want to contact any of us, if you email us, we always respond, I think, very quickly, usually within the same day if we know the answer. If not, we tell you we're going to look into it. We look into it. That's all we have. So thank you very much. Emily, how do I get up here?
Great. I think it's this is Tyler Brandon. I think I'm next, and I am going to similarly share my screen. Hopefully you're looking at a PowerPoint here. So as I mentioned, Tyler Brandon, I'm the Life and Health Director, and I'm going to cover a number of bills. Only two of them are actual department requests. We typically don't take a position on legislation. We instead try to provide objective information, and that is true for most of these bills. The first bill, Senate Bill 373, is one that we did request. This has to do with mental health parity and the comparative analysis that is a part of ensuring compliance with the mental health parity laws. So if you go back to 2008, when the federal mental health parity law passed, New Hampshire has been taking the requirements under compliance quite seriously, and in recent years has done a lot of work to ensure that compliance with the carriers. We started an exam on mental health parity, specifically looking at reimbursement practices 4 years ago. That exam took a couple of years. At the end of the exam, we could not conclude whether or not there was a violation of the act. We entered a monitoring period for another 2 years, and we just extended that. An exam itself is not any kind of enforcement action. It is simply an investigation into whether or not the carrier is complying. An enforcement action could follow that, but they're very resource intensive. And one of the problems is we can't actually talk about what's going on during the exam process because of the confidential nature of it. For this bill will align the department's efforts with those by the Department of Labor and impose the same requirements for this comparative analysis with the carriers, regardless of whether or not they're administering the benefit for a self-insured employer or in fully insured. In doing so, we take advantage of the economies of scale. The carriers are submitting information to the Department of Labor that will look similarly, and we'll be applying a consistent standard. The mental health parity laws are somewhat complex, particularly to the extent we're looking at differences in benefits, which is really what it comes down to. Mental health parity is an area where there is a lot of confusion, particularly when we're talking about reimbursement to healthcare providers, which is something considered. But fundamentally, mental health parity is about coverage and equal coverage between your physical health and your mental health. One of the primary components of that is the non-quantitative treatment limits, which could be things like deductibles, or they could be things like prior authorization or other restrictions on how you might use those benefits. So this bill, the primary change is to align our efforts with the federal government. There are two other changes in the bill that relate to autism coverage. One is a cap that is still in statute that would most certainly be preempted by either the ACA or parity laws or some combination of both of them. So I'm going to take that cap out of there so it's clear to anybody who reads the statute that the cap would not be permissible. There's also a reference to developing rules, and it does say the department shall adopt rules as it relates to autism coverage. And we haven't felt that's been necessary. The regulated entities are not confused. There's no additional guidance that we need to provide. And we haven't received any consumer complaints that relate to interpretation of the requirements. So we'd like to see that change to May or something similar. House Bill 1622 is also a parity-related bill. It began quite robust, but have added a lot of additional requirements for the insurance department and the carriers and duplicated a lot of efforts that have already taken place. That doesn't mean that interest in mental health parity compliance is any less, but one of the things that came out of those discussions is the fact that people are often looking for mental health access to mental health care providers and then finding out those providers are not accepting new patients. So one of the changes House Bill 1622, as it's been amended, would do is create a new provider contract standard in the insurance statute. Provider contract standards are requirements that need to go into the contract between a health insurance carrier and a healthcare provider. And this particular standard would require the provider to tell the insurance company that they are no longer accepting new patients within 30 days. We already have a requirement that those directories be maintained and kept accurate, a requirement the insurance department imposes on the carriers. So this would work in tandem with getting better and more accurate information to members or patients as they're looking for healthcare providers. The other change in the amended bill, House Bill 1622, is a reference to the network adequacy statute in that part of our law that is talking about mental health coverage. And then, of course, the associated rules that go with the network adequacy statute. This would link the two, and indeed our network adequacy rules are already quite robust when it comes to access to mental health care providers. Clearly, if the providers don't exist, the rule isn't going to help a whole lot. But to the extent we have that floor that is quite high for access to those providers, this change in House Bill 1622 would be very consistent with the department's actions when it comes to network adequacy and doing what we can to ensure access to mental health care providers. Senate Bill 160 and Senate Bill 286 are both dealing with an opportunity for employers, particularly employers in the small group market, to come together and negotiate better arrangements with their health insurance carriers. They approach it a little bit differently, and certainly the content of the bills is very different, but the ideas and the limitations exist in either case. Typically, if everything else is the same, in other words, you don't have a major reduction in benefits, you don't have higher cost sharing, then you're creating a situation where perhaps some of the expectations for savings with a health insurance company might be 15 or 20%. The reality is that insurance companies only retain about 10 or 15% of the premium. So you're not going to see that kind of savings without doing something quite a bit different. I like to remind people that insurance companies, one of their main jobs is to design products that people want to buy at a price point that is tolerable. So to the extent that a MEWA or an association health plan could perhaps create a message to the carriers that they are looking for a different benefit design that is going to be more cost effective, perhaps there's opportunity there, but that should be something the carriers would respond to regardless. The other risk or the other problem that association health plan or MEWA that is looking for excessive savings is an opportunity to risk select. So that means that if there's a group of employers that come together and they are much healthier than the risk pool they are leaving, that could present the opportunity for a lower health insurance premium, but it would be done so at the expense of the people who remain in the risk pool. So both state and federal requirements put restrictions on the ability to do that. And indeed, until we see a change in federal law, there would not be the opportunity for small employers to come together in a risk selection process in order to get cheaper health insurance premiums at the more expensive versions for those who are left in the pool. But Senate Bill 160 would pave the way, should there be a change at that federal level, for an arrangement in New Hampshire with certain limitations on how much risk selection could take place. Senate Bill 286 would have the insurance department developing basically a pilot AHP that may take advantage of employers coming together, but it would not be able to risk select within that market. And the other bills, Senate Bill 287 is an insurance department request. This has to do with balance billing protections and the No Surprises Act. So the insurance department in New Hampshire have been ahead of the country in balance billing protections. 4 years ago, we passed legislation in New Hampshire protecting people from balance billing for 4 of the specialties that you might receive a surprise bill for if you went to an in-network hospital. The No Surprises Act is a federal law that went into effect on January of this year. It expands protections for people when they receive surprise bills, including when you go to an out-of-network hospital on an emergency basis. Senate Bill 287 was a request of the department because we wanted to make sure that those expanded protections are in state law and that the insurance department is a role for resolving disputes and making sure that insurance companies pay those out-of-network providers in the situations that the No Surprises Act applies to. The bill was amended before it came out of the Senate, limiting the insurance department's ability to play a role for the expanded protections. So that'll be clearly an area of discussion when it goes to hearing on the House side. In addition, if you want to learn a lot more about what we have to say about balance billing and the No Surprises Act, we actually held a webinar in a similar format to this, and it was all about the balance billing and the No Surprises Act. And the link to that will show up in the chat if it has not already. Senate Bill 319 is a bill that came out of the Senate, but it doesn't look like it's going to move through the House. This is a bill that dealt with your vaccination status when you received a COVID vaccine and you're part of an employer group and a potential financial incentive to get vaccinated or be vaccinated. One of the key questions around COVID vaccinations has been whether or not that would be considered a health factor, something that is prohibited, or whether or not it would be considered a wellness program. Senate Bill 319 would have clarified in state law that those types of vaccination incentive programs are considered wellness and they are permissible. The federal guidance has already said that these are fine as wellness programs. So I think that's one of the areas of concern that the House Commerce had, is whether or not the bill was still necessary or would be helpful at this point. House Bill 1044 is not an insurance bill, but it is one we're interested in. This has to do with changing some of the requirements for a facility, the licensing requirements, that is, for a facility that receives a membership fee in order to get access to that facility. This is an interesting model and reminds us a little bit of the direct primary care model, which was also a membership-based model where you pay perhaps a monthly fee to get better access to a primary care provider. Indeed, these things can look like insurance if it's not otherwise disclosed as clearly not insurance and something that would not necessarily overlap with your insurance coverage. So if House Bill 1044 moves forward, giving these facilities a bit more flexibility in the licensing side, like the direct primary care, we would expect a more robust discussion about clarifying that this is not insurance. Otherwise, we need to consider whether or not the consumer protections are adequate going forward. Next slide is I just wanted to leave our contact info. So I'm Tyler Brannon, and Michelle Heaton is the other person from the department who is frequently at the legislature talking about these bills. And either of us should be available for questions if you think of them after the webinar today. Thank you. At this point, I think I'm punting back to the commissioner.
Well, thanks to the whole team. Well, actually, I think DJ's up next, right?
Yep, thank you, Commissioner. So just very briefly before we conclude the presentation and take some questions, I wanted to briefly address the Granite State Paid Family and Medical Leave program. I have to be a little bit careful in what I say because that program has gone out to bid for a carrier to administer the program. But obviously there is a effort to repeal the program. That effort got some traction in the House of Representatives and passed through the full body. The hearing for the bill to repeal it in the state Senate is tomorrow. I am fairly optimistic that the Senate will kill that repeal effort. But if not, the governor has publicly said that he will veto that legislation if it were to pass through the state Senate. So that program is going to be moving forward. There are not nearly enough votes in either the House or the Senate to override a veto. So one way or the other, that program will be going forward. And obviously, we hope to have a carrier, a winning carrier to announce in the next month or two. So that's it for that program. And then, Doug, did you have any items? Okay, great. Great.
Well, I'm not seeing any questions in the chat box, so given that it's lunch hour for folks, they may want to go over and get their sandwiches out of their lunch boxes, and I'll let people go. As always, the department is available to answer any questions offline. We've got contact information for all of us there. And I want to thank you all for spending 30 minutes with me on this Monday morning. Have a great day.
Thank you, Commissioner and staff. Thank you.
Thank you, Commissioner and staff.